I still to this day and always would say, somewhat secretly, because of the world we're in, and we're not really a real estate company. It's just a vehicle. We're really a finance company at the end of the day, because that's what we do.
What's going on, everybody? I'm Chris Naugle, and welcome to Money School Podcast, where we talk about, that's right, money, entrepreneurship, and today we're going to talk about something so freaking cool, and that is how somebody that I've gotten to know goes from a CPA to an entrepreneur, but doesn't just do it the normal way where they just dabble. No, goes into the entrepreneur space, the real estate space, goes headlong into it, uses what he learned as a CPA to scale up to over $100 million real estate portfolio, over 850 units. Also, he's got a real estate brokerage and a Cruity, which we're going to talk about, something very necessary in this business. But I want all of you really quickly to meet Casey from CityLife. So, Casey, tell me a little bit about like your background as a CPA and how you transitioned into that and why actually, because if anyone reads the book, from Film Night, Shoe Dog, he did the same thing. He had the idea for Nike or the other company and then transitioned, into the CPA world because it was comfortable and somebody said, hey, you want success, CPAs are how you do it. But then went headlong into entrepreneurship just like you. And I think it's a unique story.
Yeah, no, I appreciate, first off, man, Chris, appreciate you and everything that you do for everybody, and also appreciate you having me on your show, man. It means a lot. What I would tell you, right, the why behind what I've done, and I'll try to give you the quick 30-second elevator pitch right on how I got to where I was at, right? But yeah, CPA, man, 10 years, graduated from college, good college, Catholic University in Pittsburgh. I'm still here, great opportunity here, even though a lot of people across the country don't think Pittsburgh's a great investment spot. But, went a traditional route, actually went into the big four, public accounting, Ernst & Young's, where I started out of college. And so it was pretty renowned. I spent about 10 years in public accounting, corporate America, bounced around a lot, right? And the reality of it was just trying to find a job that I loved, find a passion and something that I was, really after. I always told myself, work harder than everybody, and good things will ultimately come. But I never knew, I watched Shark Tank, right? And always thought I'm so not creative at all. And therefore I'm never going to be able to come up with a product that I could run my own business. But spent all that time in public accounting. My last couple of years, I was in finance transformation. I was traveling the country 60, 70% of my time and seeing all kinds of businesses from Fortune 100 on down to small private shops. And my job was essentially to fix their back office, right? Come in and create a finance transformation strategy to allow them to kind of fix themselves in back office and scale. And every time, literally, man, it doesn't matter the size of the company. I always was ending up, and I say what I want, I always have, sometimes in my detriment, right? But I always ended up in the CFO's office of these companies and essentially telling them a little bit differently worded, right? But essentially, you're the problem. You're what's wrong with your business. It has nothing to do with your processes. Your people just aren't happy, right? And it resonated with me because I was never happy. I was working 80, 90 hours a week my whole career, and I didn't like it, and I didn't like who I worked for a lot of the times. I didn't like when they had made wrong decisions and there was nothing I could do about it. All those different things that everybody talks about corporate America was real for me too. The difference is I spent 10 years really getting a massive, understanding of finances, financial statements, and how business really operate through, accounting. And it goes all the way back to in high school, Mike. I took an accounting class in high school. My professor there, it always resonated. Mr. O'Connell, he said, accounting is the language of business. If you learn that, you'll always be able to speak business. And obviously, I went on and I got my degree in accounting and went into public accounting for 10 years. But it served me really well. How I got into entrepreneurship was really, and real estate too in general, was kind of luck of the draw. I was actually buying a house. My real estate agent at the time said, "Don't you do accounting?" I said, "Yeah." Long story short, he said, "Hey, where I'm at, the broker actually has an investment arm. He just fired everyone in the back office. He's looking for a new CFO. The CFO is stealing." I was sick of traveling, sick of doing the corporate world. So I said, "Hey, I can really get my hands on something smaller and build it." I lasted about 10 months on that company, and he actually fired me. I just didn't see eye to eye with the owner of the company. I didn't like his culture. Going all the way back to kind of the two pieces of it all, right? The language side of it, but then really the culture side of it and creating happiness. And he wasn't. And I fought that a lot. And he ultimately said, "Cool, it's my company. See you later." So he left me high and dry. I asked my wife for 6 months, bro. I said, "Hey, we don't got money. We had just bought a house. We were getting married. We were in massive debt, but I said, give me 6 months to figure this out. We don't have kids yet." And a lot of tears, a lot of rough nights, if you will, right? And trying to figure all that out. But she let me, and that's when we started City Life. Actually, that same real estate agent's my business partner now in the real estate company. Brian, I went to him and said, "Let me do your books." Did his books. After a couple of weeks, we partnered. This was called April, May of 2019. We bought our first single family home for 40 grand. We burned it. We borrowed 100% private capital, burned it, got to the bank. I think it was worth 65. We put like 5 grand into it, got like 10K out on a refi. Just started taking massive action, burn real estate, buying single family homes. And, here we are. May 20th will be, 5 years from when we bought that very first single family home, when I was in massive debt without a job and no income for a very long time. We're over 100 million now. We're right around 900 units in total in the portfolio. 5 or 6 multi-billion-dollar companies that have spawned off of that, and kind of been off to the races from there. But really, the why is, for me, our mission at this company is build happiness, transform lives, strengthen the community. That's everything that we do and try to do. We live and breathe that, and that goes back to just when I was in public accounting, and just like, people do really good work when they're happy, bro. Right? You know that, and so, if you can create a job where people are happy and enjoy coming to work, they're going to do their best work, and you're going to get more value out of them than you would otherwise. And the value cost proposition is going to be huge, and you can scale your company. So that's what we've been able to do. And that's the why behind what I do, which is, again, just try to make a lot of happy people in this world and win from it. Right. I'm a competitor. I'm an athlete, and I like to win. And if you make happy people and get them that want to win, get them working together, then, the sky's the limit, and you're able to scale fast. And that's what we've been able to do.
So I'll never forget. I've been in boardroom a long time, and folks, if you don't know what boardroom is, it's a mastermind that we're in, probably one of the best real estate masterminds there are. And real good friends with the founder, Mr. Kent Clothier, and Eddie, the CEO. And we're just sitting there one day, and I'm just like, so who's the movers and shakers in boardroom? I was just like, who are the new guys that I don't know that are just crushing it? And they said Casey Ryan Quinn. They didn't just say Casey Quinn. Does everybody call you Casey Ryan Quinn, or is it just them?
No, man, it's funny that Casey Ryan, and why it's stuck is because on the social media, and I'm far from a social media expert. I'm starting to learn it now, but it was all taken, so we had to pick something different, and so we picked that. But no one at home calls me Casey Ryan, but nonetheless.
So that's what it is, and I hear that a lot. So in social media, if you want to find him, it's Casey Ryan Quinn.
Yeah.
You can go on, but like, they're like, he's got CityLife Residential. And I'm like, well, tell me about him. And he's like, well, he's a CPA. So instantly I had a connection with your story just because you were a CPA. And I work with a lot of CPAs just being in the money space. So I'm like, oh, wow, it must be a really smart guy. And they're like, check this out, in 5 years. And I don't think they said that. I think they said in 5 years, he's built up like 1,000 units. And the first thing, just like I said to you, Casey, when we first started this podcast, I said, yeah, but are they syndications? Because I'm always the first to like hear somebody say, oh, I've got thousands of units, hundreds of millions of dollars in real estate. I'm like, hold on. Is it all syndications? And
Yeah,
they
I'm the
said,
same way.
yeah,
Yep.
they said, no, he did this with single family houses, which, folks, like, I don't know if you know the magnitude of that, right? In my time when I was doing a lot of flips in BRRRRs and all the other stuff we did 272, if I'm not mistaken, properties, 272. You've done almost 900 in 5 years. And I did real estate longer than you. Like, I can't believe you still have hair on your head, man. Like, how did you
Yeah.
scale so fast? I mean, was it systems, processes? Because I mean, I know being a CPA, you develop a lot of systems and processes, but also you needed a team, and probably a big team. So let's just talk just a little bit about it. Because when people hear that, now that they know you didn't do all this with syndications, you did this the old-fashioned BRRRR method, which is actually, let me have you explain it. Can you just tell everybody like how you did it and what a BRRRR is, and then let's talk about how you scaled that
Yeah.
fast in 5 years.
Yeah. I'll start with the high level, right? What a BRRRR is and what we were doing. It's essentially, you can do it with a lot. It's a value add. It's a value add play. So you can also do a multifamily, which we have some, right? But you essentially buy a piece of real estate that needs work, needs value add. It's dilapidated. It's run down, whatever it needs, and you renovate it, right? So you buy it, then you renovate it. And so we started a construction company. We do everything we do is in house. So we can get to kind of how we've scaled up that side of it too. But we knew we needed to control every piece of the puzzle in order to do it fast. So you renovate it, and then when you're done renovating it, you rent it, right? So you bring in the income on the top level, and then you go to the banks afterwards and refinance, right? So you get short-term hard money loans, private money loans. You know really well about all of that world, right? You know what I mean? And then you go to the banks or long-term institutional capital on what I call stabilized debt on the back end. And that's kind of your BRRRR process. And if you do it well, you can continue to repeat it because you don't need a lot of your own money at the end of the day. If you BRRRR it right, because you can add value along the way. If you buy it under market value, you renovate it, right? A lot of times if you put 30 grand into it or 50 grand into it, you're adding more value to the home than what you're spending on it if you do it right. And so you can create essentially value add equity in the deal, which you can then pull out from the bank afterwards. And ideally, you're not leaving any of your own capital into the property once you've done and stabilized it and rented it on that back end and refinance it. So that's kind of high level, you know, what I would explain to me as BRRRR at that level. For us, how we ultimately did it, like I'll tell you, man, it's a couple things. Of course, it's scaling people early and often, so overpaying for really good talent early on. Knowing it's just a value proposition, right? If they're really good, it's a cost line item and it's scary, but the value that they're going to bring to the business is above and beyond that. And so you kind of have some, part of my French, have some balls, right? To be able to make some hires and invest early. And I've always looked at it that way. To me, what I knew was key was essentially on the back end of everything. If you can stabilize that back end and focus on what we were good at. My partner was good at finding the real estate, and I was really good at the number side, getting the financing in place, talking to our private lenders, managing the math behind it all, the books and records of everything from that perspective. So I said, if we can find somebody really good to kind of oyster or really pin down our property management once it's stabilized, that we can basically forget about it, then we can be off to the races. And so that's what I did. And you probably met TJ Bedshow, who's a board director in the boardroom now as well. He's been with me for 4 years. He successfully ran and scaled a property management company. Well, I brought him on full time as my third employee. And we could not afford him by any means at the time, but we said, we're going to figure this out and we're going to way overpay because we know the value, right? If we can go do what we do well, then that's the real value that we can create. And so that's what we did. You know, my partner was really good at finding the real estate for us, off market for the most part. And then really the key to our success was the ability to really understand a financial statement, the cost of capital, and understanding where every dollar was going, and speed, right? And so our goal was always 120 days. Still is. I think right now we're averaging like 124 days from the moment we buy the property to the moment we get it on long-term stabilized debt. The short-term debt's hard. It's more expensive. Every day matters. You know, I'm always tracking. I'm big on the KPI side, so I'm always tracking exactly what things are costing us. I'm sure you see it. I see it all too much. People are worried about, windows. We're going to save $300 on a window that's not going to get delivered for a month. I'm like, well, what are you paying per day on your borrowed debt on the short-term debt? And they're like, I'm at 12, 13%. I'm like, well, do the math. Pay the $200 extra, you get the window in today and get that thing refinanced, get your tenant in there, right? And so really just being able to evaluate the cost of capital. And then the other big piece that I would tell you that really allowed us to have a lot of success early on, because I didn't have a job, I didn't have money, I didn't have income, right? Traditionally, banks require that. And so I was really good at being able to position a company, be able to position who we were, what we're doing, where we're at, the deals that we're doing really well to banks, to get them to want to essentially lend us their money, right? So that we can refinance out, take that money, the limited money that we have, the limited investors, limited partnerships that we had early on the front side, to really maximize a lot of that so that we could scale faster, and kind of maximize our dollars, if you will. I still to this day and always would say, somewhat secretly, because of the world we're in, and we're not really a real estate company. It's just a vehicle. We're really a finance company at the end of the day, because that's what we do, because we started with nothing and we had to leverage in order to get where we were. And that's what we did. I've never, in the $100 million plus portfolio, that we manage, a majority of all that is just my partner and I, so we've never put a single dollar into anything we've ever done. We've never used a single dollar of our own money, right? So that to me is how we've been able to successfully scale, is not using our own capital because that limits you, but then being able to figure out how to get the capital that you need in order to scale it. So,
yeah,
those are probably the two fundamental things: is hire early, hire the right talent, and things that you're not good at, so you don't have to, and you can focus on your highest and best use, create happiness for yourselves and others, and know your friggin' numbers.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up. Yeah, and I want to just unpack a little bit of that. Now, I relate so much to going into it with nothing and scaling, because that's what me and Larissa did when we did the real estate. We literally came in with nothing. I was a Wall Street guy. I was doing well, but I came into real estate in 2009, right after the Great Recession. So I was devastated, almost bankrupt when I entered. So I had to be really smart about it. And folks, like, I hope you'll listen really carefully there, because he said some key things that most everybody in real estate completely ignores, and that is just mathematics. Like
Yes.
the thing about the window. I can't tell you how many times I've heard of people that are in real estate struggling because they hired the cheapest contractor. They went for the cheapest materials. They're always chasing the cheap goods and services. And because of that, it slows their whole process down. And then many of them don't even know their numbers. So another thing, Casey, you mentioned there, which I think is key, and I'll ask all of you listening to this, how many of you actually look at and study your financials weekly, or at least bare minimum monthly, your balance sheet, your profit and loss, your cash flow statements? How many of you are looking at those every single month? Because we'll just keep it at monthly. If the answer is no, you are screwing up, because that is the lifeblood of your company. If you don't know your financials inside and out, then you're never going to understand how to run your business as it scales. It might be great in the beginning when your business is small and you feel like you can do it, but just because there's money in the bank doesn't mean your business is successful. Matter of fact, in many cases, when there's money in the bank, you're broke already. You just don't know it, because the way that the financials work. So one thing I've always done, like you, Casey, is I've been really a numbers guy. I don't know if it's because of the Wall Street years, but I always focused on the financials. And still today, every single week, I review with our bookkeeper. I review our profit and loss for all companies. I review our cash flow statements weekly. We do weekly projections and monthly and yearly projections. We review them to actual. And then we also review balance sheet, which is a quick glance. So folks, we do this so we understand where our company is financially, so that we then can understand where we're going and how fast we can get there. If you're not looking at that, you're literally running a business with blindfolds on. Just get in your car, put a blindfold on, and just hit the accelerator. Let me know how far you go before you run into something. It won't take you long. In business, you might make it a little further, but it's not going to last. So I love that you went into the numbers and the KPIs, because that is business, folks. It sucks for some of you. You're like, I'm not good at numbers. Good. Find somebody that is and pay them whatever they need.
Yep. That's exactly it, bro. It's literally, and a lot of people aren't, and that's okay. They're serial entrepreneurs, they're salesmen. If you're not, no problem. Find a partner that is really good at it, outsource, find a team, pay for it, right? That costs it. Number one, it's a tax write-off, but it's insurance better than any insurance plan you're ever going to buy, is having someone in your corner that really understands it, is out looking ahead for you as to exactly what it is that's going on in your financials and your money situation. Because to your point, what's in the bank is irrelevant. If you're actually running a business and growing a business, liabilities are a real thing. What do you actually owe that you're not thinking about that's going to come down the pipeline in the future that you're going to have to pay? And are you prepared to pay that when it comes? And that's massively making sure you're understanding your financials, your forward looking, your forecasts on the cash, all of those things. And if you're a real estate investment company, which we are predominantly, it's even more important to be doing those things from an asset level on the balance sheet side compared to your P&L, because everything's asset based, right? Between your assets and your liabilities and what you're doing and what you're putting into these properties, what you can get out of them, what's your net equity, what is the bank seeing, and what are you worth, right? So that you can continue to leverage smart, if you will, right? Because that's how you can scale and leverage and grow your net wealth. So yeah, without a doubt, man. So I hope some of you that are taking notes. This is gold, and you're hearing this, folks. Like, there's very few CPAs that do what we're talking about here. Casey's one of the rare ones. Phil Knight was another one. With Nike, I think you maybe have heard of him, maybe not. I mean, kind of a small company. Who's that guy?
Yeah, I don't know. If Phil Knight, you could read the book Shoe Dog, but it's literally so cool to read that, because CPAs have a secret talent that so few people out there have, but they very rarely ever make it out of their cocoon, the CPA world, because the CPA world, just like the finance world or the Wall Street world, sucks you in, and it hooks you. It like literally puts hooks in you and doesn't want to let you go. But to get out of there, you get out of it with literally better than a master's degree in just going forward. And that's what Casey did. So I want to change gears here real quick, because as you built the BRRRRs and you started doing this and you started understanding private money and you were really, really just very strategic about how you did that, you started to vertically integrate other business lines for control in your operations. And I'm just going to come over here. I'm not going to have time to go through everything Casey does, but with the brokerage company. So let's just kind of talk just a couple minutes on the brokerage company and why you felt that was an important piece or vertical integration to your business operations.
Yeah, I mean, a couple things. Number one, it's massive for us to find deals because a lot of deals are still on the market, and a lot of people in the real estate investment space don't think buying deals on the market is a smart thing to do. We've gone through lows and valleys where buying on market was huge. Our agents bring us all kinds of deals, and it's another revenue stream opportunity in the space that we're already in because we know our market really well. I'll tell you this. We actually got really lucky when we started it. My partner was a real estate agent prior to us partnering and really started the investing side. And he was paying his broker like 100 grand. So we're like, let's just stop that. We weren't going to plan to scale the brokerage. And then COVID hit and the whole world shut down. So that's where we're like, well, we're not going to sit on our butts. And we started recruiting agents during COVID. I think we recruited about 25 agents, got them all to sign with us during COVID and never recruited again.
Casey, it just hit me. Like you said, 5 years, and it didn't resonate in my mind. You literally did all of this in one of the worst times you could ever do this, during the pandemic where the world was shut down. And you're in Pittsburgh, not far from where I'm at, up here in Buffalo, New York. Like, we didn't exactly have great states to be in
Nope.
during this pandemic, and you were still able to do this. So I didn't mean to cut you off there, but like, folks, just listen. Like, if you think he had something you didn't, he did this during one of the worst periods of time you could ever do this.
I actually laugh too because definitely, and then obviously we got we hit a property value increase, which was harder for our business at the end of the day because it was harder to find. And then over the last year and a half, 2 years, it's been the hardest market we've ever been in too. I mean, everybody's saying that, and we're still, it's hard to find deals right now for sure. You just got to work a little bit harder. But yeah, it's been over the last 5 years. It's been in, I always say if we were able to navigate the COVID market, or we're navigating this market quite well. So we're, ideally, right, we should be set up for success in terms of things will eventually get a little bit better from the market, from the overall market perspective.
Oh my gosh, yeah.
Yeah, that was the brokerage. That's why we kind of got that up and running. It's a little bit of an independent thing that we're doing now. It's not massively integrated, but we do sell deals. I mean, we've probably sold 100 properties. We've probably done about 50 flips. Especially when the market was hot, we've done all that. So it was definitely advantageous to have the brokerage and to really know what's going on, to stay really tight with our market. We're only in Pittsburgh. We have a couple, luxury homes across the country that we've bought but we don't manage those. Right at the end of the day. So, it really helps us stay in tune with what's going on in the market here and everything in the real estate side. So a lot of just knowledge that we gain through that. It's not a big income stream, as brokerages are tight margins as they are.
But you control so much by having that. My wife was always a realtor when we were doing the flips, and it was just, it's not that she was going out trying to get other people's deals, but because we had so much deal flow coming in, we got a piece of everything that we either bought or that we sold. So it just helped, and it wasn't a lot, but it was enough to get you to the next day. Because there are times in real estate where cash flow just isn't there, and that little extra. Sometimes you're just trying to get to the next day. Sometimes trying to just get to the next payroll, and those little, like, that kind of business, and what we did, those little commissions, they help. They go a long ways.
Without a doubt. I mean, that's a big piece of it, right? For sure. And to your point, you mentioned the word control. I would argue that's a little bit even more of the reason why we wanted to do this. We essentially said every single dollar that ever leaves anything that we're doing, we want to control where it's going and who's getting it. And ideally, we want it to be ourselves, right? So up and down the value stream map, if you will, we've created everything ourselves so that we're getting paid. We do our own construction, a whole independent company that we own. Our management company is independent. We own that. So all those dollars are going there, right? We have a title company. So all on the title, we're closing a property every 3 days right now, right? We're buying at least 10 a month, 10 homes a month at this point in time, about one every 3 days. Well, that's a lot of title commitments, right? And so we wanted to have that control. We wanted to have control of when we can close, how we can close, who's closing it. We wanted to manage the process. And then we wanted the dollars to stay in our pockets ultimately, right? Because we believe we can create better happiness for everybody involved. And so that was kind of the concept that we've had throughout this entire thing, is everything that's touching anything we do, let's make sure we control that.
I love it. Folks, I hope you're all listening carefully, because remember in the beginning when we first started, I had him go back to the beginning when he had just left his big corporate cushy, CPA job, had no money, had a new family, had, well, I don't know if you had kids on the way, because I know you got a couple little ones now, but you were thinking that. So folks, don't think you're any different. Like he
Right.
did this in one of the hardest times with nothing but just a dream and a plan, and he followed it. Now, as we kind of get to the end, like folks, we're taking you on this journey. Just so you understand, this journey, this isn't unique to just Casey or to me. This is every single real estate investor has a story, has a journey. It just, this one's very unique because it comes from that start as a CPA. Now, I'm going to bring it full circle here, because in the real estate business, in almost every business, there's a massive business opportunity that I just don't see too many people going after, because it is a very skilled business that you need that. And that is accounting. So
Yeah.
your business doesn't operate without accounting. No one's does. And my bookkeeper is, I'm not going to say she's single-handedly the single most important person on our team, but she's up there. I'm telling you. And many businesses try to do this themselves. They learn QuickBooks. They get one of those, QuickBooks Online where everything it ports in, but it's still not going to always get it right. At a
Yep.
certain point, you're going to need professionals to do this, because you got to get out of working in your business and start working on your business. And accounting is always going to be that hard one. Accounting, bookkeeping, making sure that is there in real estate is a nightmare from an accounting standpoint. My bookkeeper literally said if we ever went back into real estate, she's quitting, because it's just so transaction heavy, so just
Yeah.
difficult with the closing statements. Like there's just a lot of moving pieces, but it's necessary. So one thing you've done is you saw that opportunity and you've now created this company. And I know this is what Ken always wants you to talk about in boardroom, because it is such a massive need and you're starting to talk about it. So I want to make sure I give it proper credit here. So let's just talk about Accruity and how you got the idea, what specifically you do and what problem you solve for real estate investors, and where you see the future of that company.
Yeah, no, for sure. And I appreciate that. That's dead right, man. Especially the boardroom is a big inspiration to, really understanding the massive need in the space because, as you mentioned, it's one of the best masterminds, if not the best mastermind there is in real estate in the country. And even in the boardroom mastermind, you have some of the biggest whales and some of the best investors in the country. People just absolutely crushing the game. And what I quickly realized through becoming friends with a lot of them and meeting a lot of people, like everybody has accounting problems at the end of the day. And I realized from all of that, like there's not a lot of people out there doing that specifically for real estate. And given what I know and what we've massively done at CityLife, I knew we could really help a lot of people fix what they're doing in their back office and be able to scale and do what we're doing with just a little bit of help. And so about 2 years ago, to your point, right, my controller, who actually started working for me when he graduated college, when I was still in public accounting, I got him to come work for me at CityLife, and he was my controller here. And actually, we went. I took him to a couple events. I think Ken Scale and Escape event down in Florida one year. And he saw it too, and he always wanted to be an entrepreneur similarly. And so, collectively, he said, "Why don't we do this at scale?" And I said, "I think that's a great idea. Let's put a little business plan together." And so we did, and hence Accruity was born about 2 years ago. And really, what we focus on is absolutely everything we just talked about, which is accounting, bookkeeping, forward-looking financial statements, everything that involves. We can do everything around the back office, financial analysis, underwriting of deals, all of those different things that's going to really allow you as a salesman or as an entrepreneur, as someone growing a business that doesn't have a great partner that was me, right, in our CityLife business. Do all those things. We can do all that for you to really allow you to see and understand and get better at speaking the language of business in your real estate investment, portfolio or business or whatever you're doing. So that's what we started at Accruity 2 years ago. We're scaling. We're really helping investors across the country. Again, from bookkeeping all the way up to, financial reporting. That's a big core piece of it all. Forward-looking financial statements, budgets, pro formas, variance analysis, deal underwriting. And really, a lot of what we're moving to now is if we're really helping that investor get bankable is really what we're calling it, because that's what we're doing. You know this as well as I know, given the industry that you're in now, like these massively successful people don't have their personal financial statements. They don't have their shit in order. They can't borrow money until they do, even though they make a bunch.
Even
And so
in
we're
the
doing
private
that,
money
and then on
space.
back of that, we're helping people save on taxes, right? Your entrepreneurs making $1 million a year that aren't investing in real estate yet because they don't understand the power of cost segregations and depreciation and all that comes with real estate investment and how to build wealth. We're really helping them do that on that side, on the tax compliance, on the tax strategy side as well now, because that's a huge piece of it, right? Back in your real estate days, you understand the depreciation side. I know you're still in it, but you know what I mean? And then the cost segs and how to really start looking out in the future to be able to I haven't paid taxes in 3 years, right? And our goal is to make sure no one's paying taxes because the government incentivizes you not to. So why not take advantage of it, particularly in the real estate space as real estate investors?
Now they do say pay your fair share, but how do you define fair share? Well, for Casey, it's pay no taxes. For some of
Right.
you, it's pay a lot of taxes, but it is a choice because you should be paying your fair share. The question is do you have the people on your team that know how to help you pay your fair share? And that's exactly what this company does. So folks, like, listen, he said it earlier on how one of the ways he did what he did in 5 years is he overpaid to get the talent. He overpaid to make sure things got done on schedule. So many people don't do that. And so many people skip the accounting and bookkeeping services and everything that Crudy does. They skip it because they think, oh, I can do this myself. Well, when you're doing that yourself, your business is falling apart on the outside because you're too busy focusing on things you're not good at, that you don't know, like, and understand. You should invest your time, money, and energy into things you know, like, and understand, and you should hire the rest. When you talk to really successful people like Casey and you ask them, do you mow your own lawn? Do you do your own landscaping? Do you wash your own clothes in some cases? Like, literally keep going down the line. All the things that rob your time during the day that you just think are things that everybody does. When you get to a certain level of success and as you climb the ladder higher, you will find that those people don't do any of that. They hire that out because that is not worthy of their time. And I don't say that in a bad way. I mean, they can go out there and spend their time doing other things that build their business, help their family, or just they're out with their family. And that's another thing you got to decide. Do you want to live in your business, work in your business, and then leave your family and not be with them? Or do you want to do the things necessary, pay for the things necessary so you can go out and live the life that you have architected for yourself or that you are architecting for yourself? And that's exactly what you need to be looking at. Like, he did this in 5 years, folks. 5 years, didn't have any, silver spoon in his mouth, didn't have anything that you don't have. He did it. Why can't you? All he understood is he had to get the right people in place. He had to pay for those people, and you need to do the same darn thing.
Because
Otherwise,
I know you want to wrap this up. Let me add one really quick comment to that because everything you said there resonates so much with me, man. Like 6 years ago, what you said right there would not have resonated with me. I've learned all of this along the way. And my wife and I struggle with it a lot in terms of like paying people to do things that, quite frankly, in a worse way of saying it, we're better than doing that. But that's not the case at all. To your point, there's never going to be a day in our lives where time isn't the most valuable thing that we have. And if you can spend your time focused on your highest and best use, making yourself the most amount of money, to your point, orchestrating the life you want to live, whatever that is, then you're not doing an injustice or feeling that you're better than somebody. What you're doing is providing somebody else with an opportunity to do something that they want to do or didn't have the opportunity prior to that. You mentioned grass cutting. I pay $150 a week to get my grass cut. I don't touch my grass. Guess what? The guys that cut my grass are happy to do it because it's providing them an opportunity to make the $150 a week. And so you have to have that mind perspective of it's an opportunity that you're providing while creating yourself an opportunity that you want and compressing your time by giving them, right? They're compressing their time because they're building a grass cutting business or whatever it is. So I just wanted to add that because I struggle with that. I did struggle with it. I still do. My wife struggles with it more of, well, we should just be doing that stuff ourselves. We're not better than cutting our own grass. But the reality is, it's nothing to do with it. We're better than that or not. The reality is, we're creating opportunities for others while compressing our own time to do what it is that we love to do, which is hang out with our kids, grow business, change people's lives, right? So I just wanted to add that because, what you said resonates so much, man. I appreciate it.
yeah, no, it's very important. It's important for everybody to hear because I, like you and like every other entrepreneur you will ever talk to, we all struggled with that one thing because, yeah, you can mow your own lawn, you can do your own landscaping, you can do all those things. You are completely capable, but you're going to come to a point where it's do this or don't do that. And
Yep.
once you have kids, and most of you probably do, you will realize that that single-handedly is the most valuable thing that you can spend your time on. So are you going to mow the lawn or are you going to hang out with your daughter or your son? That's your decision. And then
Yep.
basically some people are like, well, I can't afford it. Well, find a way to afford it. That's what you need to focus on. If your focus is on anything other than that, then you're not going to ever accomplish that. But when you change your focus, things just magically happen. That's how the universe works. So in conclusion, folks, I said it earlier, Casey Ryan Quinn. And it sounds weird, right? Because you're getting that middle name, but that's his website, CaseyRyanQuinn.com. Check it out. get in his campfire, follow him, like get him doing your books. If you don't know about bookkeeping and accounting, get somebody that does, hire his company, and then move forward, not backwards. So, Casey, anything in closing that you think would be important that we tell my audience?
No, I think we just nailed it at the end there, right? Your time is the most valuable thing you have. Value it more than anything you can. Pay for what is not your highest and best use. Get that off of your plate and take massive action. Core value number one at CityLife and all of my companies and in my life is let's go. Literally, let's go. We're never going to be perfect. Take action, make mistakes, get educated along the way. Don't let them happen again, right? Get educated from your mistakes through self-reflection and keep going, taking action, progress over perfection, and be a good person. Take care of the people around you. You know, if you're good people, you attract yourselves to good people, and all the good things come from that. So be good people, take action, make mistakes, and keep going.
Well said. Folks, we're going to put all those links in the description. So if you want to check, Casey and his companies out, we'll have the links in there. And with that being said, thanks for joining us for this episode. I'd be remiss not to say, if any of you are sitting here listening to this saying, I don't have the money, I don't know how to do this, go to privatemoneyclub.com. That's thousands and thousands of private lenders that you can solve their problem. And their problem is they want to make more money if they've got money. So solve their problem, and that will solve yours, because you need money to make more. And that's all it is, folks. Life is all about solving someone else's problem. But what you don't realize in some cases is that your problem solves somebody else's problem. privatemoneyclub.com. Thanks for joining us for this episode of Money School Podcast. See you on the next one.